Welcome to Data Details. Indian companies are going global. In FY25, Indian companies invested a record 25.6 billion abroad and 80% surge in overseas direct investments. While this spike has triggered concerns at the policy level, a closer look at the data reveals it was driven by strategic plays from some of India's biggest corporate names. These are not signs of capital fight but a reshaping of business footprints. So, what's really driving this outward push and where is the money going? Let's dive into the numbers. The overseas investment surge was led by large conglomerates with a strong global presence. Tata Steel topped the list with a total ODI of $3 billion commitment to Singapore. Vedanta and Samvardhana Motherson International followed close behind with $1.8 billion each, spreading their investments across Saudi Arabia, Germany, the Netherlands, the UAE, and Mauritius. Other companies making substantial overseas investments included Sun Pharma, Bharat Petro Resources, Biocon Biologics, Oracle Stays, Praj Industries, and Mahindra & Mahindra. But why are Indian firms suddenly so eager to invest abroad? Experts say it's a mix of long-term strategy and policy tailwinds. According to analysts, Indian companies are using ODIs to diversify operations, mitigate domestic risk, and access new markets. These moves allow businesses to expand their product and service offerings beyond India's borders. The momentum has also been supported by regulatory liberalization. Since 2022, relaxed rules have made overseas investing easier and more flexible. There's also a practical dimension. Manufacturing abroad gives companies a buffer against rising tariffs at home. Instead of waiting for policy uncertainty to ease, firms are building alternate production bases and sales routes. Further, the RBI data accounts for all foreign flows as ODIs, even if they are not in the nature of equity. Thus, in case of large MNCs, these ODIs could also relate to onshoring of debt or other similar tax planning moves, experts said. Now, let's look at where this capital is headed and what that says about India Inc.'s global strategy. A large chunk of the outward flow went to Singapore, which received $5.8 billion in FY25, up from $4 billion a year earlier. With its position as a global financial hub and access to favorable tax treaties, Singapore has become the launchpad for Indian companies expanding into other jurisdictions. It's also emerging as a destination for Indian high net worth individuals looking to set up family offices and manage cross-border wealth. The UAE, Mauritius, the US, and the Netherlands round out the top 5 ODI destinations, collectively accounting for 57% of India's total outflows in FY25. The data also shows that this isn't limited to a few industries. Sectoral patterns are shifting too. Nearly half of all ODI in FY25 went into financial, insurance, and business services, which jumped from $6.2 billion to $12.3 billion in just 1 year. Manufacturing stood at $5.2 billion, while the wholesale, retail, restaurants, and hotel category saw its share more than double to $4.2 billion. Indian companies aren't just chasing returns, they are repositioning themselves in global value chains. At first glance, the numbers may raise concerns, but look closer. This is India Inc. making a global statement. The scale of investments, the diversity of sectors, and the focus on long-term growth all point toward a new kind of ambition. Is this the beginning of India's emergence as a truly global corporate power? Let us know what you think in the comments. I am Yashaswini Chauhan and this is Data Details by the Hindu Business Line. Don't forget to like, share and subscribe for more stories powered by data.